Okay, so if you want to pull up your handout, we're just going to quickly go through the lists that I've generated there. And then we're going to go and look at a couple of programs that I have that I'd like to share with you. And some of, looking at the programs, I'll be able to illustrate to you. Right now we're talking about records. I want to be able to show you some of the reports that you can generate and what you can look for in these reports and why the detail in the records is important when you're going to look at reports. Because if you remember back to that earlier slide, we had talked about how records generate reports. Reports are used in analysis, and analysis is what helps you to make decisions to create profit. Now, I just have to see what I'm sharing with you right at the moment. Right here. Are you seeing the presentation, the PowerPoint presentation? Yes, okay, thank you. So our first slide that first couple of slides that we're going to do next are looking at the financial records. So when I'm talking about financial records, these are the things I'm talking about, all of that paperwork. So things like sales invoices. Now you may be a farm business that generates sales invoices. For example, if you're growing vegetables for a market garden and you're shipping to a restaurant, then you have to generate an invoice for that restaurant. So one of the processes or procedures that I would say is if you are creating an invoice for someone who is buying from you, the best practice is to generate that invoice within your accounting system. So oftentimes I'll see people using spreadsheets or some kind of online product or app to generate the invoice. And what that does is it creates a couple of issues. One is that it has to be eventually entered into your accounting program. So you're duplicating your processes there. And the other is that sometimes people will write out an invoice in an invoice book, or they'll create an invoice using, say, Excel spreadsheet, and then they forget about it, and it never gets into the accounting records. And I know examples where I've trained a farm business to enter their invoices directly through the program. Now, always in the first year, you're ironing out some of those practices. So what had happened was the farmer had entered the invoices in the accounting software. So when we did a year-end review, we look at receivables and payables at the end of the year to say, okay, it says in your computer records that company A owes you $19,000. Did you get the money from company A and it just got recorded incorrectly? And in that process, because he had gone through the step and taken all of his invoices from his paper book and inputted them into the computer, he then had a report saying who owed him money. And because he had that report, he discovered that that invoice had completely slipped under the radar. So he contacted the company, and there were two invoices in particular, and they had never received them. So if he hadn't put them in the accounting software, they just would have been in that book and lost forever. And everyone is so busy nowadays, and there is so much information to track. It's really important to have these processes that minimize error and maximize return. And so that's just an example of how creating your sales invoices right from your accounting software can save you money. And in that case, We found them $19,000, and that's not insignificant. Purchase invoices, what I would say about these, generally they have come in the mail. A lot of them are coming by email now. And so you really do need a process or a system to make sure that you capture all of those. And when you purchase invoices from a supplier, like let's say a Scotian Gold, or here in PEI, Kensington Ag, or maybe it's your John Deere dealership, or wherever it is, your parts, where you buy parts, typically, if you are charging things on account, they send out a statement at the end of the month. And these statements are really important because they list everything you've bought at that company during that month. And if you didn't have a copy of all the invoices, then you can see on the statement those ones that you're missing, and you can contact them to get a copy. You can also check to make sure that you don't have invoices that don't belong to your company. And I've seen that time and again where farms or businesses that have similar names, whoever's at the counter just happens to pick the wrong company when they're generating the invoice. And I mean, I think I've seen it all, because I've actually inputted invoices, and then when the statement came and I looked more closely, realized that the invoice wasn't even for that business I was in. It belonged to somebody else. And the other thing that's happened is I've had invoices signed by people in the company, and they never show up on a statement. And then when I look at the top, it was billed to somebody else's company. So somebody paid for that invoice, and it wasn't them. In that case, it was in their favor. So these things happen. Everybody makes mistakes along the way. So it's really important to check your paperwork. The next group of paperwork is really tricky. Cash receipts, debit card receipts, credit card receipts. These are really challenging in some businesses to have them all show up on the desk to be inputted into the software. And you miss things. If you don't have the invoice, sometimes you have no idea what it was that was purchased. You can't confirm the amount of tax. And if you do have an audit and you don't have that receipt, the tax is disallowed, so it becomes part of the expense. So those ones are tricky, and that really just requires systems in place to capture them. Even if it's as simple as someone taking a picture with their phone every time they purchase something with a debit or a credit card or with cash. So if that piece of paper is lost, you still have the document somewhere. Trades is an interesting one, and it is really important. A lot of people do trades to avoid putting the record in the computer. But when you do that, you're understating something and you're overstating something else in your records. So for example, on our farm, we trade manure for land rent or for hay. So if we don't attach a value to that, then and enter that trade in the computer, then we don't know the full cost of our feed and the full amount of revenue that is generated from the farm. So that's an example where trades are important to capture in your records so that you have full accounting of all of your income and all of your expenses. I mean, the net effect of a trade is usually zero on the bottom line, but it's how that impacts the individual income accounts and expense accounts. These ones are much better. The next group that's in your list, these are a lot better to track now. Online payments, you could always figure out who the online payment was made to. What is difficult is bank transfers and e-transfers in and out. Because I've worked with companies, and we would just start going through their bank statement and identifying deposits and trying to figure out where they came from. At least now, most of the banks will indicate who the e-transfer came from and who it is sent out to. But for a while there, it was just a big guessing game as to where some of this income came from. So it's pretty hard to have accurate records if you don't know or don't have documentation that shows you where the money came from. And sometimes that may mean printing off the email, or at least not deleting it from your inbox when someone is e-transferring you money. So you have a record of you can match the date the transfer went in with the email that you received. We talked about, okay, I have a question here. Do we need to take pictures or scan receipts on paper that the ink fades? Yes, you are responsible for your records. So if I have found that if gas receipts are not left on the dash of a vehicle where the sun will fade them, or if they don't go through a washing machine, or if they aren't folded into 10,000 folds in your pocket, and I have experienced it with this because my husband is a great folder of receipts, that you will lose the information on them. And again, it's difficult for the bookkeeper to get those kinds of receipts on the desk. So this does take care of that, is taking pictures and scanning the receipts. The other place where that is helpful is that in the event of a disaster, a fire where your business is conducted, if you have pictures of receipts and everything's digital and it's backed up to an external place, then you're not losing anything. You're losing a lot, but you're not losing the records, which is a lot of work to reconstruct when you don't have that original documentation. So thank you for that question. Check stubs and canceled checks is another important one. I notice more often, I personally like to have copies of all my canceled checks. On a bank statement, the only thing identifying a check is its check number and the check amount. If you don't have the canceled check and these checks are not coming from a printer, then you may not have a clue who that was written to whom that was written, or for what. So canceled checks are really important on bank statements. It doesn't mean you have to print them all off, but it is important to have a record of them. So whatever your banking system is, insist that the canceled checks, if it's e-statements, meaning you're getting your statements off through your online banking, insist that the canceled checks are part of that statement, because unless you ask for it, I know CIBC and Scotiabank, they are not automatically included on the statement. And I know that I do books for people that handwrite their checks, and it's the only way that there are some checks that we can identify is that I can actually see the canceled check. Check stubs are another really important piece of information if you don't have canceled checks. And again, my husband is fairly well trained. You need 3 pieces of information. Who did you write the check to? What date did you write it? And what amount? So for those of you who handwrite checks and leave this information off the check stub, I really encourage you to develop a new habit of putting that information in. Bank and credit card statements are important. I keep all of mine digitally and download them through my online banking. Loan and line of credit statements. Loan statements are tricky. If you're dealing with FCC as a lender, they definitely have the best system for you as the owner or manager to be able to go online and look up anything related to any loan that you have with them as a lender. With banks, it's a lot more work, and often your online banking will show you each month what the amount still owing is on a loan. And if you want to have a principal and interest breakdown in a payment, then you have to know what the principal owing is each month, and then subtract and find the difference so that you can record the amount that's principal. So these loan and line of credit statements, the banks are terrible at getting that information out to clients, but you just have to keep asking for them and they'll get it to you. And so it's important to just, again, if you make some notes or even ask your bookkeeper, if you aren't the ones doing this, to make notes in these procedures and processes, because unless it's, well, sometimes even when it is your spouse who's doing the record keeping, they may leave. And so that can leave you high and dry when it comes to the bookkeeping. But if you have this kind of stuff documented and you're hiring people to come in, you can easily or more easily introduce them to your system and your methods, and then there becomes consistency from one person to the next. Now, there we go. I think I have a little bit of a repeat there, loan and line of credit statements. Document storage is important, having a good filing system, having it fireproof, having it confidential. There's all kinds of different ways you can store documents. The move is toward paperless. So that means you need to replicate your paper filing system on your computer, which is doable. It actually results in more, in my opinion, it's more work. But if you are storing that in a cloud-based storage and you have flood or fire, then your records are safe. You are required by the Canada Revenue Agency to keep your records for 7 years. So you do need to keep them somewhere where it's dry. And I know that one year I worked with a client who hadn't done their taxes for 5 years. So we had to go back and I had to use latex gloves because there was mouse droppings in the boxes of the records. So it's nice if you can keep those somewhere clean and safe, if at all possible. Keeping your books on accrual or cash, in my view, cash is a method to file income tax. It's not a way to keep your financial records. In this day and age, in the age of computers, I don't think there's any other way you should be keeping records but the accrual method. And what that means is that you record your expenses from your invoices based on the date that's on the invoice. You don't record your expenses at the time you make the payment. And what this enables you to do is quickly see how much you have in payables, meaning how much do I owe at the end of every month, compared to my receivables, how much do I have coming in at the other end of the, or in at the end of the month. And where accrual recording becomes really important is when finances are tight and when you're getting into financial trouble. If you are working on a cash-based system, you can get into financial trouble fairly quickly and without knowledge. I mean, you have a sense, but you don't know how bad the situation is. And how bad or not bad the situation is will determine the kinds of decisions you need to make to get out of that little financial glitch. So any training that I do with clients, it's all on accrual. It just doesn't make sense to me to be recording my financials on a cash basis. Do you want to file them on a cash, file your income tax on a cash basis? By all means, because it's a tool that you can use to manage the amount of income tax you pay. But keeping your records, accrual, in my view, is the way to go. Are your records computerized? One thing here are quantities recorded. This is one thing that I really love about the FCC software, is that it allows you to track your quantities. So when you're entering sales records, or let's say you're purchasing fuel, or if you have a livestock business, if you're purchasing feed, you can not only enter the dollar value of what you're purchasing, but you can, or selling, but you can also enter the quantities. And that is really helpful in analysis, because at the end of the year, if you're looking at average price per unit, or if you're comparing year to year and say your fuel costs have increased significantly, was that increase due to a price increase, or was it due to the fact that you may be using more fuel? So to me, it's really important to track quantities in your record keeping system, or to have a record keeping system where you can track them. Simply /Sage Accounting, you can track these things, but you can't get it back in a report in an easy way for analysis. So that is one thing, and I think it's really important to record these quantities along with your dollars. Inventory. This inventory is probably one of the most ignored things in farm record keeping, but it's really, really important. And I'm not going to go into the technicals or the whys. It is important because that's a whole nother session, but you just need to trust me that it's very important to track your inventory. If you're tracking quantities in your financial records, you know how much you've sold, you know how much you've purchased, but you also need to know how much you produced. You also need to know how much was used as feed, or how much of what you produced was used as seed. And if you're tracking inventory properly, you can get a measure of what is culled each year, so that this is something that you can see, well, what's my cullage rate been year over year in terms of the quality of the crop. And if you do some crop sharing, inventory is important in that way as well. Capital asset listings. At your accounting system tracks your capital assets at the cost value. It's really important to also have a list of those assets at their market values. And again, this is the beauty of the FCC software, because it allows you to do both. So if you have, some lenders require you to give them a complete asset listing and their market values on an annual basis. And if you track this in your Ag Expert Analyst, you just push the button, you update the values, push the button, and you have a report. It's fairly easy instead of doing that with a paper and pen. Financial statements. Do you have an accounting system that generates financial statements? If you're not incorporated, if you are incorporated, these would be generated by your accountant at year end based on your accounting records. So those statements are only as accurate as we talked about at the very start, GIGO. If the information going in isn't put in properly, then the reports are not as good as they could be. Then these other things are sort of what I would call next level. The first is really just all basic record keeping and basic financial management. The next group is some of the more intermediate to advanced stuff you can do with your farm records. And that starts with financial ratios. And financial ratios, all of them come from information on a balance sheet and not the information from your income statement. So the balance sheet is a largely ignored report in farm businesses. And I think I've made it my life's mission to have farm business owners want to be looking at their balance sheets and seeing what it's telling them. The balance sheet is really, it tells you what your financial health is. The income statement tells you how profitable you are, but the balance sheet really talks about the financial health of your business. Cost of production by crop is another thing that you can get out of your accounting records. Sources and uses of cash is another really ignored statement, and it's one that even most accountants don't generate. Cash comes in and out of your business in many different ways. It doesn't come in just through income, and it doesn't go out just through expenses. Cash also comes in through financing. So anytime you are borrowing money, that's cash into the business. Anytime you purchase a capital asset, or sell a capital asset, that's cash coming into the business. And on the opposite side of that, when you pay back loans, that's cash going out. And when you purchase assets, capital assets or land, that's also cash going out. If you are a corporation and you're taking money out of your business, that's cash going out. If you put it in, it's cash coming in. So sources and uses of cash, I know from my experience, especially in the past, before computerized records, I can remember working with firms and the firms complaining that the business wasn't making any money. And when we did an analysis and looked closely at the records, the firm was very profitable indeed. It was the personal spending that had gotten out of control, because we're all the same. When we have more money in our account, if we don't have a plan for it, it just gets spent, whether that's in the business or whether that's personally. So sources and uses of cash, I would really encourage all of you to have one of these prepared and see where the money's coming from and where it's going to in your business. And budgets and cash flow projections are also a really important but often ignored function in the firm business. And again, that is a separate, that's a separate category altogether. So I'm just looking at my time here. So the next, my computer's a little slow. The next category is marketing. So marketing is really, some of this comes from your accounting records as well, but things like volumes and prices are really important when you're evaluating which crops you want to put in the ground. As well as the market itself, what the market is demanding. And three other things that I think are important and again often overlooked are marketable yield. So that's the amount of volume that's actually sold and you got paid for, and looking at that compared to what your actual yield was, and then also looking at what the potential yield is. So for me, I would be looking at this from year to year and seeing what the percentages of potential yield I have as marketing and actual, because that may be an area for improvement. And I do understand that you're working with Mother Nature and she has some impact on your results in this area, but you also as the owner and manager have an impact on those as well. And the other thing that I would encourage you to track is quality measures in your sales, or your product. And this could be anything from feed samples or protein content or Canada #1, what the grades are that you have, all the different quality measures that would apply to the crops that you have. So these are some of the marketing types of information that I would track. And those are things you could track in a computer spreadsheet. I know that Cavendish Farms puts out a grading report for each group of potatoes shipped, and that those grading slips have a lot of different information. And what some people have done is entered that into a spreadsheet so that they can quickly see what some of the grading or quality characteristics were of the product that they had shipped that year. Human resources, at a minimum, if you are employing people, you need to have their name, address, date of birth, and social insurance number. You are supposed to be having your employees fill out what's called a TD1 form every year. And what that form does is when the employee completes it, it tells you or the person who's doing payroll the amount of income tax that should be deducted. Their age tells you whether or not they should be having Canada Pension deductions taken. So if they're not 18 years of age, you shouldn't be taking CPP. And once they reach the age of, oh, I'm going to forget this, it's either 60 or 65. I think it's 65, they can opt out of the CPP deductions. But some people who are still working at the age of 65 may still need to have CPP contributions. So you can't just stop taking CPP at age 65. You have to have your employee complete a form for that. So those forms are called TD1 forms, and they are found on the CRA website. And at the very least, that you should have one TD1 form on file. A lot of times, I will see this where people will get caught and they're hand delivering the checks, the paychecks, but when they go to do a T4, they don't have an address, so they can't deliver that T4 to the person, and it gets submitted to CRA without an address on it. And if they are filling out these TD1s, all that information is on that form. The other thing, people have the option to take more tax off. And when this is needed is if you have an employee that has 2 or 3 different jobs, they're being taxed at lower rates because they have small amounts of money from each job, but when you add it all together, it may put them into a tax bracket that's higher. And so come time for filing their income tax return, they have to pay into income tax at that time. So an employee can only have extra tax taken off at one of their employers, but this TD1 form is where they would indicate if they need extra tax taken off. Other information is hours worked, what they're doing, where they're doing, and when they're doing it. And this gets important in terms of evaluating the cost of your cropping. So if you have employees who are tracking where they're working, how much time they're spending at each task and each crop. I don't have an app for this, but I would guess that there are apps out there that would do this quite easily, so that there are easier ways to track this than pen and paper. But in the absence of an app, pen and paper works. The other information is rates. So the pay rates for employees. You're required to file T4s by February 28th of each year for the employees' pay information from the previous year. And the other thing are records of employment. So if you have a staff person who has been not working for a minimum of 5 days, you are required to complete an ROE. Oftentimes this isn't done. It seems to be the loosest thing that, well, it's not CRA for records of employment, it's Service Canada. But if you have a good accounting package, it can generate the information you need to complete these forms. If anyone has any suggestions on other types of information in those categories, you can share it with your, or a question about it, you can share it with your facilitator, and we can address it. The last section or type of records that I'm going to go through is the operations and field crop records. And I'm not going to go through each of these individually, but these are the types of information that the crop recording systems that I've had experience with. These are the types of things that you can track. So there's farm records, field records, inventory, so measuring the inventory on your crop, where those crops are stored, harvest information, yields, transfers of inventory from one storage to another. Those are the different types of records that you can keep on your inventory. And in this day, when there is much demand from buyers about where we're storing our crops and tracing those crops to the fields that they came from, these types of records are really important. Also, I had talked about inventory in terms of your financial records. Well, it's not just inventory of the things you grow, it's also keeping track of inventory of your inputs. And an example of this is in the project I was talking about with the group of farmers when we were trying to determine the costs of production. I noticed in the field records that a certain product, chemical product, had been used, but there were no invoices to indicate that any had been purchased. And what had happened was he had bought more than he needed the prior year, and thinking that the price would increase. It was a product that was able to be stored and didn't expire in the coming year. So he decided that he would keep that product and use it in the following year because he felt the price was going to go up. What happened was the price actually went down, which was surprising, but it wasn't captured in the cost of production. And so he was not aware that he should be writing down at the end of the year what he had in inventory for inputs. Now, I realize that in today's day and age that this doesn't happen as often. A lot of this stuff is returned if it's not used. So there's very much of it in inventory, but if you do have it, you should be writing it down and you should be recording it as well in your financial records. So inventory of inputs, where you're storing them, the units of measure, those types of things are things that you would track around inventory of inputs. And then there's the actual field and crop records. So seed treatments, liming applications, and also the type of lime that you're applying, fertilizer types and applications, chemical products and applications. And the chemical products includes their name, their group, PCP, PHI, re-entry date, everything about that chemical. Tillage practices, that's another thing that you can track. Crop scouting, the observations that you make. So if you're observing pests or diseases, it's important to write these things down, which crop, when it was observed, and what was observed, because you can do various kinds of analysis based on those types of records. If you're using irrigation, everything around that, equipment usage, labor usage, and I'm sure there's other. I know an example in blueberries where one of the inputs is bees, and there was another, bear fences, I think was the other one. So those were part of the cost and part of the inputs used in the cropping. And so these categories were set up. Weather records is another thing that you can track, and mapping. So mapping your fields that you're using. There's a lot of that. A lot of it can now be done on farm. You don't need to go and have somebody else print maps for you. So a lot of this stuff is changing, where you used to have to go out and buy that service or buy that product. You can now get that from your own records. So I'm going to do a quick, I'll just quickly stop. We're not going to take a break, but if there are any questions from those last few slides before I go into the software demo, can you pass those to your moderator, and I'll answer those. And if you don't have any questions, if the panelists could just type that in the chat. Okay, I have one group with some questions and the other one with none. So I'll just wait for the couple of questions. And while that's happening, I'm just going to, while those questions are being typed, I want to go through the next slides, and then I can just flip over to the software. Okay, my first question is when I am talking about market value, am I talking about replacement value or depreciated value on the capital assets? When I'm talking about market value, a market value is what you could realistically sell that for in the marketplace. So if I have a 5-year-old tractor and I wanted to establish a market value, what could I realistically sell that for in the marketplace? That's what a market value is. A replacement value is the cost to replace, is the value on a tractor to replace that one, whether it was used or new. And so I guess the replacement value is also a market value because you have to pay for that. And a depreciated value is different from market value. Depreciated value is the cost of your asset divided over the number of years that you think it's going to last. So you would, if you had a $100,000 tractor that you were going to use for 20, let's say 10 years, it would cost you $10,000 a year. So, and that you would depreciate that tractor by $10,000 a year. So if it starts out at 100,000 at year one, the depreciated value is 90,000. At the end of year two, we subtract another 10, the depreciated value is 80,000. So that is what depreciated value is. Market value is what you could, and I emphasize realistically, get from the marketplace if you were to sell that item. And you can have something that you may have a tractor that you think is worth $50,000. I can get $50,000 for that. Well, in reality, maybe you could get 20. It's really important to use a realistic price and not a price that you wish it would be. And you can let me know if I've answered that appropriately, or if it answers the question, I guess, is what I'm trying to say. So if there, okay, thank you. So the software that I'm going to demonstrate is the FCC software. I have been using computer accounting software since 1989, and I started, so yeah, that's a lot of years ago. I started out with DOS, so that's how old I am. And I love DOS, actually. I thought it was really efficient, and if you could learn to use it, then it worked really well. So I started with was called Bedford Accounting, which was the what Sage and Simply used to be called, and so that's where I started. So I've been working in farm records for 30 years, and it was when I started my business in 2007 that I made the choice to try the switch to FCC's Ag Expert Analyst. And at the time it was an adjustment for me. It's really hard to switch from one program to another, but in the end, I felt this switch was worth it. The program certainly developed and improved over those first several years that I used it, and the software developers were very open to any suggestions we had for improvement. So a lot of those improvements came from users, and there's one thing in the program that I wish it would do differently, but other than that, I would use it hands down any day over Sage Accounting. And that's just my opinion. Everybody has their own opinion, and sometimes it's what you get used to. But I did start with Sage, and I've used it since it was a DOS-based program. So I have a lot of experience in it. So I do love the Ag Expert Analyst desktop software, and I'm going to show you that. FCC is moving their software to the cloud. So the cloud-based version is called Ag Expert Accounting. I may or may not get to that today. I'm not using it as much, and the reason for that is it's still under development. I would say if you were starting out with your accounting and you were a young company and young people love everything app related. And so this accounting in the cloud is aimed at those people. And eventually we'll all be there. My computer is not responding. There we go. The other two pieces of software that I want to show you really quickly are the field and crop record software. So the desktop version is called Field Manager Pro, and there's also a Field Manager FM Pro 360. The difference between the two is the 360 version allows you access to satellite imagery, so you can actually do some mapping in that software. But if I wanted that feature, I would just go to their cloud-based software. And in this case, I would probably move people or suggest that people use the cloud-based version for this record-keeping software because you can get that mapping feature right off the bat. So now I'm going to change what I'm sharing with you, and I'm going to go first to the desktop accounting software. The Kelly's Cross, I don't usually share people's financial information, but the Kelly's Cross Community Pasture is an organization that I do administration for, and their records are public if you go to their annual meeting. So you would be able to see this information anyways. And what I wanted to illustrate here is, let's move something out of the way. I wanted to illustrate how detail is important. So for example, if at the end of the year, and you can do this at any time of the year, I like to run through my income accounts and my expense accounts to see some of the detail. And it also tells me if I may be looking at a particular expense line in my income statement, for example, custom cropping, then I can go to these reports, and these reports are in any accounting software that you would use, and they're called your ledger accounts. And what they will do is show you all the detail in each of these ledger accounts. So I'm just going to start with bull rental. Actually, I'll start with salt expense. And I'll do a range of them so you can see them. So I'm going to go, bad debt is the last one in the list. I'm looking at the period of the current 2019, and I am sorting those in date order. So the report that comes up on your screen is showing you all of the detail for each of the different expense categories. Now I am going to try and find there was something I had here yesterday that would allow me to use a different kind of pointer, but I'm not seeing it right now. So I'll just use my mouse pointer. So here's salt expense. This is all the detail on the salt that was purchased. I'm going to go down to vet and medicine. I can go through this account and see everything that was purchased, if there were any emergency calls, any herd health. And if you were, there's not a lot of cropping that's done here on the Kelly's Cross Community Pasture, but this is how I enter my record. So every time I enter a purchase, I put exactly what was bought. So I know what the fertilizers were, and everything in this software is exportable to a spreadsheet. So you can do sorts with this. So you could sort everything by alphabetically or by numerically. So there's all kinds of further analysis you can do. Okay, you're not seeing. Just give me a second. Someone's telling me they're not seeing something here. We aren't seeing what you're seeing. Okay. Okay. It seems that when I generate a report, that opens another window. Can you see that now, Rosalie? Yes, okay. So I'll just remember that when I go from report to report. So what I was illustrating is that in each of these accounts, the more detail you put in your entries, then when you're looking at totals at the end of the year, you can quickly, without having to go through a bunch of invoices, go through your accounts and see the detail. So this shows the forage seed that was purchased, where we purchased it from, how much here's where I was talking about quantities, where you can enter the quantities in here. And here is the dollar amounts over on the right, sorry. So these are the purchases, and these were any discounts or returns over here in this section here. So these are looking at your general ledger accounts, and what you see in your general ledgers is based on the person that's entering the data and how much or how little detail. So I can see the tow spreader cost me $11 a ton. So when the board of directors is doing their planning in February for the future year, we can quickly look up any information they need to make those plans for the coming year and what things cost and that sort of thing. So I'm going to close that. Okay. And then I'm going to share with you, I'll bring it up on my screen first and then I'll share it. No, I want to share it so you can see. There are a group of management tools, and one of these is called the cost of production. And I'm actually going to open another data file to illustrate this. Just bear with me. And I know you're probably not seeing it yet. I'm just bringing it up on the screen. Okay. Share. So on the screen, you should be seeing a cost of production report showing the cows. And there are a number of expense categories. So what this tool allows you to do, so this is the accounting software. I'm not sure why it's only showing me those production periods, but in that there are two things you can do here. You can edit your list. So if you are a cropping operation, you can enter the different crops that you would grow in this list. And again, it depends to what level of detail you want to break this out. So you can do it by individual crop or by groupings of crops. Say fruits might be one and vegetables another, or root crops and might be a grouping. I don't know all the names of the different types of crops, but it's up to you how you would sort this out. So if I wanted to, I already have cows as a category. So then the second thing that you do is you assign your expense accounts, and this is where you set up. So this allows you to do the different groupings. I'm not sure why this isn't here, but so for example, my cow purchases would go in as livestock purchases. My cows with calves would go in as livestock purchases. So you set this up one time and you put all of the different accounts you're tracking into these groupings, and these categories or groupings are what you see listed here. So I'm just going to do a few of these. And supplements, I'll put in the feed supplements, and I'll find crop expenses here. So fertilizer, we'll go into the fertilizer category. Toe spreader, I'm going to put into the fertilizer category. You might decide it goes into machinery rentals. Lime. Okay, so now I'm going to click OK. So see how on the right these numbers are populating once I have assigned all of the different types of accounts I have to a category. And then when I put in the number of, so let's say we have 100 cows, and you can do this with acres. The quantity, the unit of measure here will depend on the commodity up here that you're choosing to evaluate in terms of cost of production. So if I have 100 cows, and if I had all of this mapped, these numbers would be accurate. But just based on the little bit of mapping that I did in that last step, my feed and supplements are $8.27 per cow. My fertilizer and lime is $178.27 per cow. My livestock purchases are $163 per cow. So if these were your cropping costs, then you could work this out, your cost of production out on a per crop basis. So one other part I want to show you here is, oh, not that one, sorry, the allocate commodities. So what this allows you to do is allocate all of your costs. So remember how I had 3 commodities in our farm database: corn, cows, and forage. So what I can do is I can take this list here is every single expense that has been recorded in our books for the fiscal year 2019. I can sort all of this according to any of these categories. So if I want to sort them by account, this will sort it so that I have all the marketing charges together. And I can say, because I know how I track the data, these marketing charges on our farm are 100% for the cows. So I assign 100% of them over there, and then I update. So you can go through every category of expense that you have and assign these. So let's go to the fertilizer. They're in alphabetical order. Should be. No, they're in account order. On my fertilizer here. So I can highlight this. So if I knew that this particular blend of fertilizer, and because I'm consistent in my data entry and I've established procedures for this, this is where sorting becomes important. So I can say, well, that was all applied to the forage crops, and I'll update that. And then I can say this, maybe these were applied also to the forage crops. Gonna update that. And we'll say that these 2 went on the corn. So do you see what I'm doing here? I'm going through my list of expenses and I'm allocating them to the crop or to the livestock grouping that I want those costs to be allocated to. And then I just have to, then when I'm finished, let's say I had done all of that, then all my numbers will be updated here. And I just have to change it back to my 100 cows. So then the numbers would be updated on my screen depending on which category that I'm looking at. This is a really, really quick, like this is a session in and of itself, but this is just to show you that once you have your data entered, that you can use these things to do other types of reporting or analysis. You can do your financial ratios. You can do a 5-year report here on your financial ratios so that you get the trend over time, and then you can see it in the form of a chart. There's efficiency measures, production unit costing, average sale price. So these are some of the tools that are built in here. And in this software and in other softwares, they're all exportable so that you can export things to spreadsheets if you prefer to do further software. Now, I'm just looking at the time. I quickly want to show you the field and crop record keeping software on the cloud. So here, can you see this screen? It is the Ag Expert field, and I'm on the internet. What? Okay, before I leave that, what is the question? Oh, you're not seeing the report. Okay, sorry about that. What is the uptake of this software by accountants versus Sage and other accounting software? In Prince Edward Island, everybody that I work with, their accountants are using this software. If they don't have a copy of the software in their office, we will generate the reports and save them as PDF documents and email them to the accounting firms, and they're very happy with that because they can see everything that they would see if they actually had the data file. I'm not sure why that is in PEI, but all of the accounting firms, they're very comfortable with using this software. And what I tell farmers is that they're the ones that are paying the accountant to do the work and not the other way around. So really, they should be it's the farmer's decision as to what software package that they want to use. What you would have to establish is if you want to use something that the accountants aren't familiar with, either A, what will that cost you? And B, do you have to change accountants to who are comfortable with that software? Now, now can you see on the screen the Ag Expert Field program? Okay, perfect. Thank you. So this software, I'm just going to minimize that. This software is a sample database, and I'm just going to drag my screen over here. So this on the right, when you open up the software, tells you what your crop inventory is if you're tracking that. If you have any contracts, the contracts is primarily a Western-based grain thing. And if you want to go to your fields, I have a slow internet connection. It's getting slower by the minute. And I'm going to just pick a field. This is a sample database, so I'm just going down to a field that has something in it. So when I select that field, I can quickly see any activities that have been done during the year, whatever year. We're in the 2018 crop year, as it shows up here. So these are all of the activities that have been completed on that crop that have been recorded. In the bottom of the screen, I have an aerial view, a map of that field. And up here on the right, screen is just not responding. I can click the drop down and I can see all the rotations on that field for the last, well, in this case, there are 2 years of data. And I can also see the crop protection products that I've used, what the different groupings are, because it's my understanding that if you're using all of the same group, that is going to lead to pesticide resistance. So it's important to know what groupings your products are that you're using. and you can quickly see what they are. You can quickly see what the yield results are, and you can also see what those inputs, the total amount of input used and the cost per acre. And again, this all is dependent on the setup. When you set up this type of software, you want to input to set up all the fields, all the inputs, and the costs, and you can change those from year to year. And then I quickly want to show you a report, which is a profitability report. Just give it a second to come up there. One of the challenges of working in the cloud is internet connectivity. So if you don't have it, then this may be a challenge to work on a cloud-based software. So in this particular window, you can do projections on a field or a crop, and you can look at the actual year-to-date results. So in this case, it's these are the fields, the individual fields. So it's showing the area, the total expenses recorded to date, the yield, if there were any sales records related, and it shows you your profit per acre and your profit on the field. You can do that by all fields or by individual fields. And you can also see that by the crop. I'll just pick corn, nothing, canola. So there are some canola records in here, so I can see this is my profit per acre on that crop, and this is the overall profit on that crop based on whatever inputs I have included in the software. So this is a really quick look at the software that's available. The other thing I haven't even mentioned is the technology that comes with some of the equipment that you're using. I know that it is tracking applications, quantities, but I am not familiar with the software that goes with those systems to know what kinds of analysis that you can do with that. The only other thing that I would mention is the desktop software. The beauty of it, and I know that they're moving to this in the cloud-based version, is that you are able to fill out your Canada GAAP reports if you're using the desktop software. So I know I'll have to share this with you in a second. Can you see where I'm at in the program? It shows fruits and vegetables with a selection beside it. Okay, so I'm just going to keep going. It may just be that you can't see the report. So I'm going to click next. So it's asking me which report do I want the program to fill out. I'm going to choose the chemical, the H1 report. I'm going to tell it which fields. I'm going to select all the fields because I don't know which ones have data. And I'm going to go back to 2018. So I'm going to say all dates, and I'm going to generate this report. Oh, I'm already over time. I'll just bring up this report and then I'll open it to questions and we'll finish. It takes the report a few seconds to generate, but it is a lot less time than it takes to fill them out by hand. So can you see the report, or do I need to share that with you? Can you text me? Oh, there's the chat. Yes, we can see it. Need to share the report. Okay, I'm going to share the report here. Share. So you should be able to see the report on your screen. I'll try to maximize that a little bit more. So this is the H1 report, and this is if you have entered your crop records and your field records properly, it will fill these reports out for you. There are 5 reports. It will auto-populate for you, and the software contains, you can print off any of the other forms that you need, and the reports are updated annually in the spring of the year so that you always have the most recent copies of the on-farm food safety reports, the Canada GAP reports. They've had different names over the years. So that is just another feature that this program has in particular. This is the desktop version, and they are also working to incorporate that in the cloud-based version. So I'm going to stop there. Are there any questions? Does analyst talk to FM Pro? Does analyst talk to FM Pro? It does. You can pull in from analyst your fixed costs. So things like insurance, tractors, those sorts of things, overhead costs. And you can record your sales in Field Manager Pro and export that to analyst. That is not something that I have done, and have been told that it doesn't work the best. So they are 2 different systems, and it's important that your field records and your crop records be, your field and crop records and your accounting records be reconciled with one another, but they are 2 completely different pieces of software. And to me, your accounting records should definitely be in your accounting software, and there's no place in there to put your field records, or vice versa. Are there any other questions? If not, I want to thank you for your attention. I'm thinking it's harder to listen to these types of presentations, so I hope that it has worked fairly seamlessly for you. And it's been certainly fun for me to try this new technology, to be able to share information. And I appreciate the opportunity to make the presentation, and I appreciate your attention during the presentation. So on that note, I will let Jen take over.
Great, thank you very much, Rhonda. That was fantastic, and I'm just switching to my screen share here. Great, well, thank you very much. I think everyone learned a lot today, and whet our palates probably for more information on record keeping, which is such an exciting topic. But I definitely want to thank you. And I did want to actually just put it out there that we have a number of other getting into the weed sessions coming up on January 31st, 7th, or February 7th and February 14th. Then we have getting into the weeds on winter greens. And then also on February 12th, we have one on food safety success and are you ready? So we'd be happy to see you back here again, joining us. And if you have any questions, I saw that Rhonda included her contact information on all the sheets that were passed out to everyone. And then you can contact Rosalie or myself if you have any questions about webinars, and make sure that you're always following our several blogs and webpage, and we're trying to stay up to date and current and trying to do things in a new way. And that today was one of those efforts. So today was brought by Perennials Green Initiatives and FCC sponsorship. And thank you very much to all our participants. And thank you, Rhonda.